To cut across to the Jubilant conference call. Now, it's basically the sales number at 608 crore, which came in Q1, and the profit after tax at 19 crore, the EBITDA at 57.7 crore. I think we're going to have to wait a bit till we go to that conference call. Let's go back to aviation stocks while we're waiting for the Jubilant FoodWorks management to start interacting.
Once the Act gets notified. Before I turn the call over to Ajay, I would like to take this opportunity to introduce everyone to our new Chief Financial Officer, Mr. Sachin Sharma. We are excited to have him join the team. Mr. Sharma brings with him an extensive 21 years of work experience in media, entertainment, digital, IT and infrastructure. I would now request our CEO Ajay Kaul to take this call forward and provide you with greater insights on the quarter.
Thank you, Hari, and very warm welcome to all present with us on this call today. I would start by going to the Euromonitor report, which came out a couple of months back, which is a once in a year report, because it's once in a year and it gives you the full summary of what happened in the full year of 2015. I want to spend a moment or two on that. The good news is that Domino's Pizza not only is the #1 brand in the country in the food service space, which it always was even last year, but we have further increased our market share and we have become a formidable #1, ahead of all other honorable opposition of ours like McDonald's, KFC and everybody else. On the pizza front, we always had the #1 position for a long time, but we have further increased our market share. So that puts us in an indomitable #1 position in the pizza space. Having said that, for the full year 2015, let me now move on to precisely this quarter. Over the past few quarters, while we continue to do what we do like doing the best, is offering our customers a delightful experience, we have also been navigating the changes in the industry and market conditions adroitly. During quarter one, we have increased our revenue by 7%. However, our same-store sales declined by 3% due to economic conditions and I would say calendarization impact like Ramadan falling in quarter one this year. Revenues were also impacted by a delay in the launch of our new product, Pizza Mania Extreme, by a few weeks. However, with successful launches of new products and other initiatives, quarter two performance is far better than what we saw in quarter one, and we should definitely end up in the positive same-store growth territory. I will address the three core areas that we have our focus and highlight how they continue to drive opportunities for us. These three areas are network expansion, innovation and technology. Starting with our restaurant expansion, during quarter one we opened 23 new Domino's Pizza and 7 Dunkin' Donut restaurants. As we speak, our total number of restaurants stands at 1062 for Domino's and 73 for Dunkin' Donuts. Talking of innovation, besides elevating customer experience, it also enhances operational efficiencies. On the product side, we have introduced Pizza Mania Extremes, which aims to give our value-conscious pizza lovers a culinary experience. Our recent burger pizza launch is also a result of the company's focus on innovation and is an attempt to create a new category by bringing pizza-ness in a consumption segment that is addressed by burgers and sandwiches. It is already doing very, very well. In Dunkin', our Dunkin' Doos is the newest range of donuts that embodies fun and exuberance for the younger audience. Big Joy Burger is an outcome of delivering the differentiated and delightful Dunkin' burger experience for the value-conscious customers. To provide further thrust to innovation agenda of the company, we have brought on board Mr. Subrato Gupta as the Head of Business Excellence and Innovation to lead and drive the efficiency across organization. Mr. Subrato brings 19 years of extensive work experience in the field of enterprise sales innovation, scale innovation, digital technology solutions, social strategy, and enterprise collaboration. Thirdly, on the technology front, our online ordering is highest in the industry and continues to grow quarter on quarter. Today in Domino's, our average online ordering sales contribution to delivery sales stands at 44%, significant growth over previous quarter, and mobile ordering sales contribution to overall OLO at 41%. We extend our digital strategy with the recent introduction of OLO option for our Dunkin' Donuts customers also. We have also invested in cutting-edge technology across business functions, which will only further strengthen our efficiency. We have implemented SAP HANA, Ariba platforms, and Oracle Transport Management System, which will strengthen our supply chain and logistics across the company. Last but not the least, we have deployed speech recognition-based order-taking platform for select restaurants where customers would be greeted by a virtual assistant who can interact like a normal human person. Also, I'm pleased to announce that Mr. Ramandeep Singh Virdi has joined us as the Chief Technology Officer, and I'm sure with his expertise, we will be able to further leverage technology to achieve business objectives. Mr. Virdi brings with him 21 years of extensive work experience in field of key strategic transformational solutions, IT infrastructure, and security. Moving on, with respect to the outlook for restaurant addition, our motto is to open profitable stores. We have opened 36 new Domino's Pizza restaurants thus far and are in a good state and position to achieve our planned objective of opening around 130 to 140 profitable new Domino's Pizza stores for full year 17. For Dunkin', our plan is to open around 15 new Dunkin' Donuts profitable stores, and so far we have launched 8 new restaurants. It is pertinent to share here that in Dunkin' Donuts as we speak, during this year, 6 restaurants have been closed. Last year we had closed 3 restaurants. These 9 restaurants were a part of the early formative days of Dunkin' Donuts introduction, wherein varied iterative formats were tried out. Having now formulated and crystallized by and large which model works best for us, we deemed it appropriate to close these restaurants at this stage as they were not delivering our expected return on investment. Needless to say that profitability is our driver for both Domino's Pizza and Dunkin' Donuts, and especially with regards to new store opening, and that is reflectable in the closure of these Dunkin' stores. In conclusion, I would like to highlight that we have set the enablers in place which will help drive growth for the coming quarters. Given our solid business platform and optimism for improvement in overall economic parameters, we are expecting positive performance in near future. I will request Arvind Vats, our Chief Investor Relations Officer, to guide you through the financials.
Thank you, Ajay. Before we dwell on the financials, a quick note that the published number for the quarter have been drawn up as per the Ind AS. Also,
Ajay Kaul, CEO at Jubilant FoodWorks, addressing investors in that conference call.